today is our third lecture, and we are going to start with the financial statements. Okay, so today's lecture is about financial statements, taxes and cash flows. I gave you a small handout which contains a brief history of accounting and financial statements. So what is mentioned in this small paragraph or small write-up, one-page summary, is that how this financial statements were, what was the origin of these financial statements, and how this science of accounting came into being. So basically, in the olden days, people used to manufacture the things for their own personal needs. With this process of manufacturing, some people, they became expert in manufacturing of certain items. So what they were doing, they were producing more than their own requirement. So they were able to sell those additional products to other people. So that was start of the business, you can say. Now, slowly and gradually, they found out, and with the development of modes of transportation, they found out that those products can also be shipped to other places. They can also be sold to other localities. So in a way, their business started to expand. Once their operations and their business started to expand, they needed additional funds. So since the manufacturing was centralized, the people, creditors who wanted to give loan, they were sure, they knew that what's going on, and they knew the all the ins and out of the business. So there was no problem for them to lend the money. But with the passage of time, these operations, they became scattered. Like they found out that they can produce with economy when they produce at different localities. Now it was, and the size of the business became so large that it became practically impossible for the lenders to visit and see the actual status of what's going on, what is the state of the business, what are the assets involved, what is the process of manufacturing going on. So they started demanding from those people, okay, you bring some document which can prove that what is the state of your business. So pretty much that was the start of the financial statements. So people started preparing a sort of statement in which they can present their assets, in which they can present their liabilities. So you can say early form of balance sheet was there, and then people wanted to know that how much they were generating in terms of revenues. So they started preparing a statement to show their profit and loss. So this is how these financial statements came into practice, and they became popular. So that's all which is mentioned in this small write-up, that how these started. As far as the function of accounting is concerned, so accounting is a science in which we record the business transactions. So it starts with the recording of transactions, and then once we have those transactions recorded, we prepare a summary of those transactions. From that summary, we generate different financial statements. So end result of accounting process, or you can say the product of accounting process, is the financial statements. Now, there are four types of financial statements which are there if you look at the annual reports of the companies which are published by the companies. Inshallah, in today's lecture, we will see example of maybe two annual reports, and we'll see that these financial statements, balance sheet, income statement, statement of retained earnings, and statement of cash flows. These are the financial statements which are published in those annual reports. Okay, so annual report pretty much is a small book in which the information is distributed to the shareholders, to the stockholders. It contains the financial highlights of the past, whatever the company was doing in the past. There is a letter to stockholders from the CEO. So basically, there is a communication going on between the management and the stockholders. The financial performance is highlighted by means of financial statements, and the team, the organization of the how the organization chart pretty much is there in the balance sheet. So we can see an example. There is this annual report of packages. Packages Limited, Pakistan. So this is the annual report. I downloaded it from their website. The information that is contained, you can see from the contents. What are the contents? So company profile is mentioned in the this annual report. Company information is given. Organogram is there. Business divisions, competitive business strengths. Then the governance. What is the board of directors? Management committees, vision, mission and policies, code of conduct. Then information about information which is communicated to the stakeholders. So 10-year summary of their financial performance is there. Horizontal and vertical analysis. That is how you analyze your financial statements. Inshallah, next lecture or next lecture number 4, we'll cover this part, horizontal and vertical analysis of the financial statements. Value added and distribution, sources and application of funds, events calendar, corporate social responsibility. Then shareholders information. So notice of annual general meeting, as I mentioned in the last lecture, that every public limited company hold an annual general meeting every year in which they elect their board of directors. Then directors report to the shareholders, and then shareholders information. Next section contains all the financial statements. This financial statement that we were talking about, statement of compliance with the code of corporate governance, review report on statement of compliance with best practices of code of corporate governance, auditors report to the members, and financial statements. So consolidated financial statements are there, which shows the financial performance of different divisions of the business, or different departments. Then directors report on the consolidated financial statement is there, auditor report to the member, and consolidated financial statements. There is a proxy form attached with this. So this is in case any shareholder is not available or he's not able to attend the annual general meeting, he can send his proxy form.
How do you differentiate between a stakeholder and a shareholder?
Shareholder is pretty much the one who has purchased the share. Stakeholders are more than that. Like stakeholder can be a creditor as well, the one who is willing, who is going to lend the money to the company. So stakeholder is a broader term, whereas shareholder is a specific.
All shareholders are stakeholders.
All are stakeholders, but stakeholders can be other than shareholders as well, like creditors can.
Basically, there are two parts.
Okay.
First, the verbal one, described as company profile, governance.
That is
financial.
right. One is about the company information, whatever the organization of the company is there, company profile is there, and then major portion of the annual report deals with the financial statements. One thing I wanted to show is this auditor's reports. That is after the audit is done by the auditors. So this is the auditor report. The auditors, after they complete their audit, they give this report, and in this report you can see what they have mentioned. We believe that our audit provides a reasonable basis for our opinion, and after due verification we report that in our opinion proper books of account have been kept by the company as required by the company's ordinance 1984. So that is what they are certifying there, that the company is maintaining proper accounting. In our opinion, the balance sheet and profit and loss account together with the notes thereon have been drawn up in conformity with the company's ordinance 1984. So pretty much that is a authentication given by the auditors that all the financial statements, they are in order, they are prepared according to the requirements of the state. So once the company get this certificate from the auditor, then they can publish their annual report, then they can publish their so these are the chartered accountants who have issued this auditor's report after completing their audit. Okay. So there is another example. If you want to see, I have given another link. That is a link to the annual report of MCB. So that is just for your own additional, if you want to see. These are the two examples of annual reports. You can just click on them, and these will open their websites, and you can see them online. Okay, now the financial performance of the company is gauged by means of different financial ratios. Different financial ratios are there which shows how the company is performing. These financial ratios we are going to cover in the next lecture. Our lecture number 4 is about this financial ratios and the analysis of financial statements. Balance sheet, we discussed last time. Income statement, statement of retained earning. Again, I'm going to give you overview today as well. Statement of cash flows and report from the independent auditor. That is, we have already seen that auditor's report in the annual report. Okay, balance sheet, we have discussed last time that what are the major components of the balance sheet. This is a typical format, table format, in which there are two sides. Assets are on the left hand side and liabilities and stockholders' equities on the right hand side of the balance sheet. By the way, now in Pakistan we have a mixed culture going on right now. This is the pattern which is followed by the American companies. If you look at the British pattern, they reverse the things. Liabilities and owner's equity is on the left hand side, assets are on the right hand side, but that doesn't make a major difference, but only sides are flipped. So either way, and some of the financial statements are not in the table format, they are in the report format. So they just show their assets on the top and then they show the liabilities and stockholders on the bottom. So that format you can also find in some of the financial statements of the companies. We have already discussed what is meant by current assets, what are fixed assets, what are current liabilities, long-term liabilities, stockholders' equity. Any confusion in your mind about the definition of these current assets, fixed assets, current liabilities, long-term liabilities, stockholders' equity? Okay, so we move to the next slide. Okay, this I already mentioned in the last lecture as well, that the balance sheet provides us a snapshot of a firm's financial condition on a particular date. We always mention on the top of the balance sheet that it is on a particular date. Why? Because the financial position is constantly changing. It is pretty much changing every day. So the state of your assets, your liabilities, your fixed assets, they are constantly changing. So whatever we can see in the balance sheet, that is at a particular point in time, which can change. Either if you go one day before or if you move to one day after, the situation might be different. So that is important about the balance sheet, that it is always a snapshot. It always gives us an overview of the company's financial position on a particular date. Okay, again, current assets are those which are assets intended to be converted into cash. Our intention of holding these assets are that they will be converted into cash within short period of time, which is 1 year. So within 1 year time period, time frame, all of these assets will be converted into cash. So cash is there, cash equivalent, T-bills, commercial paper, these are called cash equivalent because they are just like cash. You can cash them anytime you want. Account receivables are your credit sales. Inventory is your stock that you want to sell to the other people. FIFO and LIFO. FIFO stands for first in, first out. And LIFO stands for last in, first out. These are the two inventory valuation methods. How we can determine the value of our inventory, there are different methods. These are just the two of them, first in, first out and last in, first out. These methods can be used for determining the value of inventory. We will not go into detail of that. That is not the topic right now. Prepaid expenses. Prepaid expenses, some expenses we pay in advance. For example, rent. Usually what happens that if you want to rent a building, you have to pay the rent for the entire year or maybe for 6 months. So that we treat as our current asset. It is just like you keep certain amount in your bank as a deposit. तो वो जो आपने बैंक में पैसा डिपॉजिट के तौर पर रखा है वो क्या चीज़ है? वो आपका एसेट है. So it is just like that. Prepaid expenses are just like you have kept the money aside for a particular purpose, and that money is available for that specific purpose only. That is why it is treated as a current asset. Other current assets, anything short which is are like supplies. Another current asset can be supplies. Supplies are your consumable assets, those which you keep in store. The company purchase them in bulk, and as they are issued on as and when required basis. So their accounting is done like at the end of the month we calculate how much is consumed. Whatever is consumed, that is treated as our expense. So supplies can also be a current asset.
Those supplies come the inventory also?
No, inventory is for sale purpose, and supplies are not for sale purpose. Supplies are for your own consumption. So they will be consumed, they will not be sold. But inventory is for the sale purpose. We sell it. We maintain inventory for sale to the outside parties, or that is our source of revenue. Supplies is not source of revenue.
So for instance, it's a manufacturing organization.
Right.
Now the raw material which they procure and keep in stock.
That will be inventory. No, that will be inventory. That is a stock. That will be inventory. That is not supplies.
जो प्रीपेड एक्सपेंसेस हैं ये आपकी लायबिलिटीज
नहीं, प्रीपेड एक्सपेंस जैसे मैंने एग्जांपल दी कि जैसे आप बैंक अकाउंट में पैसा रख देते हैं, ठीक है, आपने कहा जी 1 लाख रुपया मेरा बैंक में सेफ है, तो द व्हाट इज दैट? दैट इज योर एसेट.
लेकिन वो किसी मकसद के लिए आपने पे करना है, इसलिए आपका डेट है,
प्री पे कर दिया हमने, एडवांस पे कर दिया, अल्टीमेटली इट विल बी कन्वर्टेड इनटू एक्सपेंस, लेकिन वो डेट नहीं है. डेट तो तब होता ना कि हमने किसी से लिया होता और उसको वापस करना होता, तो हमने लिया किसी से नहीं, हमने उसको एडवांस में दे दिया है कि ठीक है ये हमारी पेमेंट है, बट वी आर पेइंग यू इन एडवांस. जो प्रीपेड, जैसे मोबाइल फोन का कॉन्सेप्ट है कि आप चार्ज करवा लेते हैं, स्क्रैच कार्ड यूज कर लेते हैं, ठीक है, तो आपके बैलेंस आ गया अब आपके पास, दैट इज योर एसेट. ठीक है, वो अब आप उसको यूज करेंगे तो आपके लिए है. Okay, fixed assets, it includes property, plant, equipment, automobiles, all of these are covered, land, all of these are covered in fixed assets. One thing that should be kept in mind that we carry these fixed assets at cost. According to GAAP, which is generally accepted accounting principle, the fixed assets are recorded in the balance sheet at their purchasing price, जिसको हम cost कहते हैं. मतलब एक land आपने, if you purchase the land in 1980 at a cost of at a cost of 1 million rupees. So even if you are preparing balance sheet today, which is 13th of July 2012, still you will mention the same price, which is 1 million. Although the land might have appreciated many folds, but all these fixed assets are carried at cost. That is appreciates. Yeah, that's what I mentioned, that it might have appreciated many folds, many times. 1 million might now be 10 times of that, but still you will mention it at 1 million. Another thing associated with our fixed asset other than land, because as you mentioned, land is never depreciated. Other than land, like property, plant and equipment, all of them are depreciated. What is depreciation? It is decrease in the value of asset due to usage. So once we are using any fixed asset, the value of that asset is decreasing. That is known as depreciation. And in accounting, we maintain a record of depreciation. What we are doing in accounting, that we are deducting this depreciation from our revenues. We treat depreciation as an expense. So what is the logic behind that? Why we are treating depreciation as an expense? Any idea?
Because today if we have to sell it off,
right?
Today if we have to sell it off, we may not get that cash or that amount
which was originally paid. That can be one.
After a few years, it will be of no use.
Right.
So its life is less.
So every fixed asset has a useful life, certain useful life, after which, as Ashfaq sir mentioned, that after that period, after its useful life is over, it might not be of any use to us, and then it means we need a replacement for that. So from where we are going to get the money for that replacement? So that is the basic philosophy behind depreciation, that right now when we are using this asset, we are putting certain money aside by the name of depreciation expense. There is an account called accumulated depreciation. Accumulated depreciation. So this account is maintained to show the amount of depreciation that is done on a particular asset. So accumulated depreciation, at any point in time, if you want to know how much depreciation has been done on a particular asset, we can look at the balance of this account. ठीक है, इसके accumulated depreciation account के balance को आप देखेंगे तो आपको पता चल जाएगा कि हम कितनी depreciation कर चुके हैं किसी asset के ऊपर.
ऐसे जो actual price उस property plant equipment की वो भी आपके पास as an asset होगी, depreciation उसमें से आप subtract करेंगे.
Right. Depreciation उसमें.
Keep a total account of that particular thing. जैसे property है वो अगर से 1 million की या से take example of equipment.
Right.
1 million का और depreciation 5 साल के बाद उसमें अगर 0.5 million depreciation हो रही है, तो that would be a positive and this would be a negative.
Right. So we represent our fixed assets at book value, and book value is calculated as cost minus this accumulated depreciation. So in the balance sheet, this equipment will be shown, the cost of equipment 1 million minus accumulated depreciation. So net value will be shown in the balance sheet. Depreciation key? For example, okay, this the formula that we have here is straight line method of depreciation. Straight line method. Straight line method, the formula, straight line method is one of the methods of calculating depreciation. It is not the only method. There are so many methods. Like there is accelerated depreciation method, there is units of output depreciation method. So a number of depreciation methods are there which are used by different companies for different purposes. But the commonly used method is the straight line method, and with this method we can calculate depreciation cost minus salvage value divided by estimated useful life. So for example, if we have purchased a machinery for 100,000, the cost is 100,000, and the salvage value, now again salvage value is an estimated value. We say that okay, this machinery that we have purchased, the useful life of this machinery is 5 years. So we can get production from this machinery for 5 years, after which we have to discard it or replace this machinery. So at that time, after 5 years, obviously there will be some value left. It will not go free of cost. There will be some salvage value. Salvage value is whatever is the leftover value after 5 years. So we at that time our estimate is that after 5 years this machinery will have a salvage value of 5,000. So this way we can calculate the depreciation. 95,000 divided by 5, it will give us depreciation per year. So this is the amount of depreciation that we will be charging on this machinery on annual basis.
Accumulated depreciation, what is the difference between these two?
Accumulated depreciation? Okay, this is the depreciation. Now 5 years we have to depreciate. 1, 2, 3, 4, 5. For 5 years we will be depreciating approximately how much will be this value? 19,000. Okay, approximately 19,000. So in year 1, at the end of first year we depreciated this machinery by 19,000. At the end of year 2, again we are going to depreciate it by 19,000. But the accumulated depreciation will become 38,000. Accumulated depreciation means
year 2 it will not be 19 because this figure would then become 4, lower figure.
No, that is a standardized figure. Only at one time we have to calculate this amount. That why it is called straight line, because this amount will remain constant. This 19,000 is going to be constant. If you put it on the graph, its graph is going to be something like this, that it is 19,000 per year. So if you charge for first year it is 19,000, if you charge it for second year it is 19,000, if you charge it for third year it is 19,000. So it is a straight line. That is why it is called straight line method. This 19,000 is going to remain constant. ठीक है, इसलिए इसको स्ट्रेट लाइन मेथड कहते हैं कि इसमें ये ग्राफ अगर आप इसको बनाएंगे सो इट विल बी इन द शेप ऑफ अ स्ट्रेट लाइन. So 19,000 is going to be constant. Now your question that what is the difference between depreciation and accumulated depreciation? Depreciation is 1 year what we are going to charge at the end of 1 year. And accumulated depreciation, what is going to be added in that? Like after 1 year it is 19,000, after 2 years it is going to be 38,000, after 3 years again it is going to be 47,000. So accumulated depreciation will keep on adding with each, with the passage of each year.
And then there is another method of depreciation, the by percentage. They say that okay, it's 10% annual depreciation.
That is accelerated depreciation method. Accelerated means in accelerated depreciation, the concept behind accelerated depreciation is that we can charge higher amount of depreciation in the starting years. In the beginning, we want to keep our depreciation expense high, and in the later years, we want to keep our depreciation expense low. What is the logic behind that? Any guess why we want to do that?
Because when the equipment is new, the chances of its going off is lesser.
Repair expense will be less.
Yes.
So that is the main logic behind that. That in the starting years, there is not going, the machinery is not going to demand any repairs. So we can keep aside a higher amount in the form of depreciation. But in the later years, we have to incur additional cost on the repair of that machinery as well. So at that time, we want to keep our depreciation expense low, so that the difference, whatever repair expenses are there, that can also be accommodated. So that is the logic behind accelerated depreciation method. So
when production या साइड पे भी ऐसे टाइम अगर आपके पास नई मशीनरी नए प्लांट पे हो सकता है आपकी प्रोडक्शन हाई
ज़्यादा होगी, प्रोडक्टिविटी भी उसकी ज़्यादा होगी, टाइम के साथ उसकी प्रोडक्टिविटी हो सकता है कम हो जाए. That can also be another factor. So that is all about fixed assets. I hope the concept of depreciation is clear. We are not going into too much detail because that is not, we are not taking a financial accounting course, so I'm just giving you, yes. Right.
We are adding depreciation over here in our fixed assets.
We are not adding.
We are not adding, but we are deducting the
Right.
depreciation value.
Right.
But like for instance, property, land, the prices will appreciate.
Right.
There is always a possibility that
Land is going to.
appreciate. Why do we still stick on to the original value?
Okay, now again, the appreciation in the value of asset is a subjective. The evaluation of that. Who is going to evaluate that? How much value is appreciated? Because that is opinion based. I mean, some person might say that okay, the value of this piece of land is 100,000. Another person, you go to another person and he might say it is 120,000. Another person might be willing to give you 150,000. So now there can be a lot of variation in that. So to avoid that, all this dispute of variation or like difference of opinion, the accounting standard defined is that just evaluate your land on the cost principle. There's another logic behind that. The accounting principle, these accounting or the financial statements, they are maintained on a principle called going concern concept. Going concern concept. Our assumption behind this financial statement is we are going to keep on doing our business. We are not intending to sell it. ठीक है, गोइंग कंसर्न कंसेप्ट का मतलब है कि हम ये कह रहे हैं कि जी हमने बिजनेस बेचने के लिए नहीं बनाया, हमने बिजनेस को करना है. तो जब हमने बिजनेस बेचना ही नहीं है तो व्हाई वी शुड एंटर इनटू दिस डिस्कशन कि जी मार्केट वैल्यू क्या उसकी. वो तो तब क्वेश्चन अराइज होगा ना जब हमने अपने बिजनेस को किसी को बेचना है, तो तब हम वैल्यूएट, देन वी वांट एक्चुअल फिगर्स कि जनाब हमें वो बेस्ट प्राइस मिलनी चाहिए. बट वी आर नॉट सेलिंग इट. सो ओपिनियन बेस्ड वैल्यूएशन के बजाय डॉक्यूमेंट बेस्ड, that is much safer. That can only be said. Right. At that time, that is another scenario. At that time, that can be pledged at the current market value. क्योंकि जब आप उसके साथ negotiation करेंगे with the lender, then you can negotiate. जी ये हमारी ये लैंड है जो मैं प्लेज करने जा रहा हूँ, दिस इज द करंट मार्केट वैल्यू, एंड ऑब्वियसली वट एवर प्राइस यू आर कोटिंग ही इज नॉट गोइंग टू एक्सेप्ट दैट प्राइस, दैट लेंडर इज गोइंग टू इवैल्यूएट बाय हिज ओन सोर्सेज, वो अपने सोर्सेज इवैल्यूएट करके कहेगा जी ये बनती है आपकी, और यूजुअली ही इज गोइंग टू गो डाउन ऑफ व्हाट यू आर सेइंग, लेकिन वो अपनी वैल्यूएशन को मानेंगे, आपकी वैल्यूएशन को नहीं मानेंगे, उसकी बेसिस पे वो आपको लैंड करेंगे। Okay जी, so that was about the fixed assets. Okay, there can also be some intangible assets like trademarks, patents, goodwill. All these are intangible assets. I hope all of you are with the engineering background. Trademarks, patents, goodwill. Goodwill is how goodwill is an intangible asset, but it is usually, it comes into the financial statements once you are buying it, once you are buying business from someone. At that time, the person who is selling the business, he will demand over and above of the net worth of his business. Net worth will be your assets minus liabilities, right? So if asset minus liabilities, let's say, is 1 million, he's not going to sell you, if his business is well reputed and he has a customer base, so he's not going to sell you in 1 million, he's going to ask something over and above. वो कहेगा जी 1 million तो नहीं, मेरा तो इतना customer base है, मेरी इतनी नाम है market के अंदर, so you have to pay me extra amount. Now whatever you are paying extra, that is the goodwill. So in normal circumstances you will not find goodwill in the balance sheet, but goodwill is, it comes into play once there is a sale or merger or acquisition of a business, then this goodwill comes into play. Okay, and
But are these other intangibles, are they added in these?
yeah, these are, no, intangibles are like these three which are mentioned there: trademark, patents, and goodwill. Other, there can be other assets, long-term assets, which do not fit into other categories, like they can also be mentioned in the balance sheet. Like we have two categories defined in the balance sheet. One is current assets and the other are long-term assets. Usually these intangibles are in the long-term category.
So what we add for trademarks, for example?
Uh,
Is added?
Yes,
Yeah.
yes, that is the amount that we got it because we have paid certain amount to get it registered, the trademark. So that amount is our asset. It will be shown in the fixed assets.
And for patent?
Again, same thing. Whatever we have paid for that, that is the amount which is shown in the balance sheet.
Goodwill जो होगी, that will be the selling price of the जो lesser होगा उससे goodwill आएगी या
हाँ, जब आप सेल करेंगे तो जो परचेज करने वाला he is going to pay
the
goodwill,
So
right?
it is basically the asset that is going off from the person who will purchase.
Right.
ये भी assets में मतलब ये आप assume करते हैं इसमें goodwill?
नहीं, वो तो फिर आप पे करेंगे ना। मतलब मैंने बताया कि नेट वर्थ आ गई, आपने एसेट्स में से लाइबिलिटीज माइनस किए, 1 मिलियन आ गया, तो वो जो बेचने वाला होगा तो 1 मिलियन में तो नहीं मैं बेचता हूँ, मैं आपको 1 पॉइंट मतलब इस पे मैं एक्स्ट्रा, वो जो आपसे एक्स्ट्रा अमाउंट ले रहा है, जितनी भी उसने अमाउंट ली है वो आपकी गुडविल है।
मतलब हम तो ये बैलेंस शीट में हमें शो कर रहे हैं
जी, बैलेंस शीट में शो होगा।
ये अदर एसेट्स में जब आएगा तो गुडविल के तौर पे हम उसमें अपना उसमें ऐड करते हैं
जी बिल्कुल।
अज्यूम करके ऐड करते हैं।
नहीं, वो तो अमाउंट जो हमने पे किया वही है ना।
अच्छा वही
वैसे मैंने बताया नॉर्मल सर्कमस्टांसेस देयर इज नो गुडविल, यू डोंट शो गुडविल इन योर बैलेंस शीट। गुडविल ओनली कम्स वंस यू परचेज बिजनेस फ्रॉम समवन, and at that time whatever extra amount we have paid other than the net worth of the business, that is goodwill. वो अमाउंट ही है कि उसमें जितनी आपने ओवर एंड अबव अमाउंट पे किया। Okay, liabilities, current liabilities we have already discussed. Accounts payable, these are your credit purchases. Accrued liabilities, those liabilities which are, or those expenses which are outstanding expenses. Like if rent is outstanding, it can be accrued liability. If interest is outstanding, that can be accrued liability. Income tax can also be, income tax payable is accrued liability.
goodwill को आएगी तो पहले एक्सपेंड हो चुकी है now they will
Right, बिल्कुल। Accrued means the event happened, but you haven't paid for that.
वो तो अकाउंट्स में गए तो किसी तरह के
बिल्कुल फर्क है। अकाउंट्स पेबल तो सिर्फ एक कैटेगरी में आ रहा है, which is your credit purchases. तो सिर्फ क्रेडिट परचेज में अकाउंट पेबल आएंगे। उसके अलावा जो आपके आ रहे हैं, जैसे मैंने एग्जांपल दी, यूटिलिटी बिल्स हो सकते हैं, इनकम टैक्स, interest, all these come in accrued liabilities. And then notes payable is another category which is in written form. It has to be in writing, and it has to be on a legal document. So that is the difference. Accounts payable usually are verbal, like you take the example of these departmental stores. Those supplier people, they come and they give them the stock, like Pepsi. The delivery for Pepsi comes. Suppliers, they come, they drop the whatever consignment is there, and then they give them the receipt of that, and they tell them that, okay, next time when we come, we are going to collect the money. Usually that is not right. Verbally they define, it is defined, like the credit is defined. Usually it is accounts payable 30, 60, 90 days are defined, but they are not very hard and fast. If it is 30 days, if a person is paying after 45 days, still it is same thing. But as far as notes payable is concerned, it is time defined. You have to pay on time. And if you do not pay on time, there is interest also. So then it means additional expenditure will be there.
Why is it long?
Because it has to be in writing. So long term, if you are giving someone money on verbal basis, the risk will be there. Risk will increase. So if it is in writing, on a legal document, the person who is taking the loan is bound. He cannot go anywhere. So that is the basic purpose, to ensure the security.
And in further, if a company has taken a loan from the bank,
Right.
so the monthly or the 6 monthly or whatever the pay would it come on the account payable?
No, usually it is in writing form. It will come under notes payable. Mortgage bond and debentures. Anyone who want to give us the difference, because last time we discussed this, the difference between these two. Both are bonds, but there is a difference between these two. Okay, first of all, what are bonds? पहले तो ये बताएं ना, bonds क्या होते हैं? Okay, from the corporate point of view, we are not talking about the government point of view. From the corporate point of view, what are bonds?
Formulated something with cash.
दो तीन दफा डिस्कस करना है बॉन्ड। पहले बॉन्ड बताएं ना, फिर उसकी टाइप्स डिस्कस करते हैं। व्हाट आर बॉन्ड्स?
Bond is a financial instrument. Like for example, amount of a loan taken from
Long term loan. So it is a document which shows that the corporate, when we are talking about corporate, obviously our focus is on corporate sector. So corporate, the well established corporations, stable corporations, they can issue the bonds. Bonds are just like shares, like they are open, they are sold to the general public. In the same way, the bonds can be sold to the public. The difference between bonds and share is the shareholders become owners. They become part of the they have ownership rights in the business. But the bondholders, they do not have the ownership right, rather they are the lenders, they are the creditors. So the money of the shareholders cannot demand their money back. Once they have invested the money in a business, they cannot demand the money back from the corporation. If they are not satisfied, they can sell their shares in the stock market. But the bondholders, they are going to get their money back at the expiry of the period for which these bonds are issued. So usually bonds are issued for 5 years, 10 years, 15 years, long-term period. Now, two types of bonds can be there. There can be many types of bonds, but these are the two types which are mentioned here. One is mortgage bond. Mortgage bonds are those bonds which are backed by a certain fixed asset. So they are secured bonds. Like the bondholders have this surety that no matter what happens, they have this asset. If the company go bankrupt, their money is secured. The money will be recovered from the sale of that asset which is pledged. Whereas the debentures, they are bonds which are unsecured. There is no asset on the back end. So that is the main difference between mortgage bonds and debentures. Both are bonds. Mortgage bonds are secured, whereas debentures are unsecured bonds. One thing is there that no, that's why I mentioned earlier that only well-established corporations can issue bonds. Not every company can issue, because
those bonds for the purchaser, they are normally being insured. So even if you won't get it credited, the insurance is available. That is what is fine.
I have no idea about that, if they are insured or not. If they are insured, then that can be a different story. But as far as I know, that like if Coke is issuing bond, the name itself in the market is such strong that people will be looking for buying those bonds. Another thing is, once people know that it is not a mortgage bond, then obviously if Coke is issuing that, they have to offer a higher rate of interest as compared to the other bonds. So they are compensated by means of additional payment. So that difference will also be there. In case of mortgage bond, the rate of interest will be little lower since security is there, they are secured, risk is less. Debentures, if risk, they offer higher risk, but the return will also be higher on that. So public will be interested in buying it. Right. Once they are issuing it, it is mentioned that if the bonds are backed by a certain asset or if it is not backed, if it is a debenture or if it is a mortgage bond. Yes, these are negotiable instruments. The bondholder can sell them in the stock market. So any person can buy and sell, just like shares. Okay, another liability, deferred income tax liability. Any idea? Okay. So this is basically income tax. So the corporations, they are charged income tax on their income. Now the company is maintaining their record, and based on their income they are calculating certain amount of tax. Now it might happen there can be a difference as far as the tax calculation is concerned. The tax calculation in the books of the company can be different, and the tax calculation by the tax authorities can be different. Whatever is the difference there, that the company hold it with itself, that maybe at a later stage if tax department is going to ask for depositing of extra income tax, then that money will be used. So that money is kept by the company, but it will be kept as a deferred income tax liability. It is going to be there at the company, but it is just to meet that difference, that whatever the tax is deposited, but still there are chances that if the tax department is going to evaluate the financial statements and they are going to come up with their own tax calculations, so they might ask for a higher amount of tax. So that is, this amount is on the backing. So that is right. That is the difference between these two. Okay, stockholders' equity. Another section of the balance sheet, stockholders' equity section will be there in case of corporations. Two types of stocks can be there: preferred stock and common stock, that we have already discussed in the previous lecture. The difference between these two: preferred stock are those which offer fixed rate of return but they do not have a voting right. Common stockholders, they do not offer fixed rate of return, but these are the ones who are the actual owners and they have the voting right. They are the one who elect the board of directors. Then paid in capital is whatever shares are sold in the market and the price which is received against that is called paid in capital. Retained earnings, again, anyone who want to describe retained earnings? What is the concept of retained earnings? The name indicates retained, something which is retained, earning the profit. So the profit which is retained in the business, it is not distributed to the shareholders in the form of dividend. And then treasury stock. What is treasury stock? This is a new concept we have not discussed. That treasury stock is sometimes the company purchases its own shares from the market. So that is kept as a treasury stock. No, then it will not be in stockholders equity section. Then it will be in your asset side. Then it should be in the asset side, not in the stockholders equity section. That is your short-term investment. So it should be your asset. This treasury stock is your own shares that you have purchased from the market. Yeah. So different reasons can be there. One reason is that you want to reduce the number of your shares in the market. Other reason can be you want to distribute these shares among your own employees. That can also be reason behind treasury stock. So these are also shown in the stockholders equity section. Correct? Okay, time. Okay. So far we have covered two financial statements. One is balance sheet, and rather we have just covered balance sheet so far. So the next income statement is income statement. Income statement shows us the results of operations, and it covers a certain period of time. So there are two main components of income statement. One is it shows our revenues, whatever the income we have generated, and it shows the expenses that have been incurred for generating those revenues. Now, as far as the income statement is concerned, the data is a little bit modified to make certain analysis. Now here in this slide you can see that from the sales, cost of goods sold is deducted. Cost of goods sold is whatever incurred, whatever expenditure is there in generating those sales. And then there are other expenses. So after deduction of cost of goods sold and other expenses, we get EBITDA, which is earning before interest, taxes, depreciation and amortization. E stands for earning, B is for before, income tax, depreciation, I is for interest, earning before interest, taxes, depreciation and amortization. Depreciation is charged on the fixed assets. Amortization is charged on the intangible assets. So decrease in the value of intangible assets is amortization. Now from EBITDA, when we deduct depreciation and amortization, we get EBIT, which is earning before interest and taxes. From this EBIT, when we deduct interest expense, we get EBT, which is earning before taxes. And from this, taxes are deducted to get net income. So rather going directly to the net income, we have put certain other checks in between to find out how the companies or how the firm is performing. And the comparison of 2 years is given in this slide, that compared to 2004, how the company is performing in 2005. Intangible assets like patents, trademarks, with the passage of time, their value is also decreasing, so that is amortization. कम होती है नहीं, डिक्रीज वैल्यू उनकी डिक्रीज होती है विद द पैसेज ऑफ टाइम. ओके, सेल्स जो आपके रेवेन्यूज हैं, सेल्स what you have generated the sales. The other is cost of goods sold. Means you can say, like simple example, if you are selling this pen for 15 rupees, so that is sales. 15 rupees is the sales price. Now you might have purchased this pen from someone for rupees 12. So this 12 rupees is the cost of goods sold. The difference between these two. If you are manufacturing, so this 12 rupees is your cost of goods manufactured. So whatever cost is incurred on manufacturing of that product. पेटेंट्स वो फिक्स है. हम करते क्या है कि उसको हम instead of charging it in one go, we divide the expenditure over a period of time. So that's with every income statement we are charging certain amount from it. So the expense is distributed over the life of that asset. That is how we charge it. Same with goodwill. Like we have paid some extra amount, but instead of paying it in one go, what we are doing, we are distributing it over the life of the asset. So this, Yeah, just like the straight line depreciation, we use estimated life. There also we find out some estimated life and divide it by that. The cost divided by the estimated life.
Well, why do we require EBIT and EBT once we have calculated the net?
Okay, that's a good question. Now, if you are comparing two different firms, one firm is debt financed, the other one does not have the debt financing. Now we want to remove that factor, because if the firm is generating fund from the debt, obviously they are paying interest on that. So interest is deducted from the your revenues, and the company with their interest expense, it will show less net income as compared to the one which is not paying the interest. So you are basically removing that factor to see how the two companies are performing. That factor you are taking off. That is the reason for breaking down this. Again, depreciation and amortization, both are non-cash. Both are expenses, both are deducted from the revenue, but both are non-cash.
They cannot be uniform.
They cannot be uniform, but we want to see that without those, assuming that if there is no depreciation and amortization, how the companies are performing, because both are estimated expenses. And
for comparative purpose, we only require EBT. Other than that, why do we require EBIT?
as I mentioned earlier, EBIT, why? Because we want to see earning before interest and taxes. Interest factor we are taking off. So we want to see that, okay, equal amount of funds are there, irrespective whether they are generated, whether from debt or equity, how the companies are performing. So that is the reason of taking off calculating EBIT. And EBITDA, the purpose of calculating, again, depreciation, amortization, both are non-cash. We are not paying cash to anyone. So we want to see the performance. Right. Basically cash flow, right. Okay, in the once we give the balance sheet, income statement, below income statement some other information can also be given, like earnings per share. What is the earning per share? So earning per share is calculated by dividing net income with common shares outstanding. So whatever is the net income, it is divided by the common shares outstanding, means the number of shares which are issued. Earning per share, okay, on the bottom figure there should not be a dollar sign, right? It should be without dollar sign. It is a number. 100,000 is the number of shares which are issued.
Which have been sold or which have been given for sale?
Which are issued to the public. Which are issued to the public. Because there are two types of shares. One are issued and one are authorized. So authorized shares can be more. It might be possible that the company has not issued all of the authorized shares. So whatever they have issued, that we are taking here. Earning per share, clear? Net income divided by number of shares which are issued, number of common shares outstanding, or number of shares issued.
Net income is going to be
Last line. Last line. No, that is after tax. The last line. This one, net income. From EBT we are deducting tax, and then the last line is net income. Right. Dividend per share. Again, another calculation that can be seen, or that we want to see that how much dividend is given to the shareholders. So dividend paid to the shareholders divided by the number of common shares outstanding.
Why do we call shares issued as shares outstanding?
It's a term that is used.
Outstanding is a very different feeling.
Outstanding sometimes is like for loan outstanding, but that's the term that is used for issued shares. In terms of finance, that is shares issued. Okay, book value per share. Book value, that what is the value of the share as per our financial books? Right. That was loss. Second. Depreciation and amortization is added back.
before income tax.
It is not added back. It is deducted.
But
तो माइनस थे ना दोनों, 116 माइनस 116 में माइनस 13 ऐड करेंगे तो माइनस 130 आएगा, वो भी नेगेटिव है. 116 इज ऑल्सो नेगेटिव. राइट, लॉस हुआ है. माइनस माइनस ऐड होके माइनस ही आ रहा है नीचे की. जी
अगर आपका जैसे
नहीं, इंटरेस्ट तो फिक्स कॉस्ट है, वो देना ही देना आपने. माइनस टैक्स इसमें माइनस में कौन सा वाला? वो यहाँ पे एडवांटेज मिला है, क्योंकि टैक्स जो है वो लॉस की सूरत में टैक्स तो नहीं होगा ना आपको, वो इसलिए वापस ऐड हुआ है उसमें, माइनस नहीं हुआ, टैक्स नहीं कटे, इसलिए वो ऐड हुआ है, माइनस नहीं हुआ. अगर माइनस होता तो फिर वो 3 लाख समथिंग आता. हाँ, लॉस की वजह से कॉम्प्लिकेटेड हो गया वो. आप उसको 2005 को छोड़ दें, 2004 को देखें, वो आपको वो ज़्यादा क्लियर है. ये लॉस की वजह से ज़्यादा कॉम्प्लिकेटेड हो गई है. लॉ 2004 वाली क्लियर है, उसको आप देखें. 2005 वाली चूंकि लॉस में जा रही है तो उसकी चीज़ें थोड़ी सी अदर वे राउंड है. ओके, अर्निंग पर शेयर इज क्लियर, डिविडेंड पर शेयर इज क्लियर, बुक वैल्यू पर शेयर, what is the value of share as per our books. So total common equity here means what is the paid in capital plus the retained earnings, दोनों इसमें ऐड हो गई हैं, and that is divided by the number of shares issued. Okay, the last statement that third statement, the financial statement is statement of retained earning. The statement of retained earning is very simple, straightforward statement which shows the changes in the retained earnings. So basically the format of it is that opening balance of retained earning, whatever is the retained earning at the start of the year, net income of the current year is added into it. Then if there is any dividend paid, that is deducted, and the remaining the resultant figure is our retained earnings at the end of the period. So statement of retained earnings shows changes in the retained earnings. Again, retained earning is your retained profit that you are retaining in the business. So whatever was the opening balance, all the net income is added into it, then dividend is deducted, and the resultant figure is our ending balance of retained earnings. This ending balance of retained earnings will be shown in the balance sheet. In which section? Where we'll show this ending balance of retained earnings in the balance sheet? Retained earnings. उसके नीचे stockholders equity section में आएगा. So this ending balance of retained earnings will be shown in the balance sheet in stockholders equity section. Okay.
balance sheet और उसके अंदर front income को add करके उसमें से preferred होगा.
Right. So very simple. This is the simplest of all the statements because it just shows the changes in the retained earnings. Okay, the last one is our statement of cash flows. This statement shows us the flow of cash. What are the sources through which we generated cash and where we spent that cash. It is divided into 3 sections. One is operating, second is investing, and the third is financing section. The format of statement of cash flows, we show the cash flows from operating activities, then cash flows from investing activities, and then cash flows from financing activities. I hope the difference is clear. What are the cash flows from operating activities? Cash flows from our operations, which is revenues and expenses. Cash flows from investing, sale and purchase of assets. Sale and purchase of assets will be in cash flows from investing activities. And cash flows from financing?
The one which we have invested.
Right. Loans and loans or equity, both will be shown in cash flows from financing activity. Now, once we add them up, there is going to be net increase or decrease in the cash. It will show either positive or negative balance. Both possibilities are there. The cash balance at this point can be positive or negative. In this cash balance, in this net increase or decrease in cash, we are going to add the opening balance of cash, and the result is going to be our cash at the end of the period. So this statement of cash flows gives us whatever is the balance of cash available with us. Now again, this cash at the end of the period is going to be reflected somewhere in some financial statement. So where it is going to be shown, in which financial statement it should be shown? Cash. Now this balance of cash, where it is going to be reflected. Right. पॉजिटिव भी हो सकते हैं, नेगेटिव भी हो सकते हैं. It can be profit. It can be because the cash flows from operation will compose of revenues and expenses. So if it is positive, it means there is net income. It can be profit. Negative, right? No, not necessarily. It can be positive, it can be negative. If you have purchased new assets, it will be negative. If you have sold some assets, it will be positive.
This is not as a result of investing activity.
Yes.
Cash flow as a result, once you have invested, it means you have given money and you are getting some money as a result of investing.
Investing activity can be two types. It can be sale of asset, it can be purchase of asset. Both are investing activities. So if you are selling some asset, obviously you are receiving the cash, it will be positive. If you are buying some asset, you are paying the cash, then it will be negative cash flow. ज़्यादातर नेगेटिव ही होगा क्योंकि आप मोस्टली इफ यू हैव एक्वायर्ड एनी फिक्स्ड एसेट इट इज गोइंग टू बी नेगेटिव. इफ राइट खर्च कर दिया तो नेगेटिव ही होगा. कौन सा प्रॉफिट? इन्वेस्टमेंट के बाद and you are receiving the profit, it is going to be reflected in cash flows from operating activities. If you are getting some profit from some investment, it is going to be reflected in operating activities. Negative balance in investing is okay, negative balance in financing is okay, but negative balance in operations is dangerous. It should not be, because that means there is something. This statement itself is a financial statement. Yeah.
You have said earlier in the box that it will be shown where.
Which one? Oh no, I asked that cash at the end of the period, where this balance will be reflected, in which statement? Balance sheet. In balance sheet, this balance of cash will be shown as cash balance. So this current assets, right? In current assets we show the cash. This is the balance that we show there in the balance sheet. Okay, this is just an example with the figures. Cash flows from operating activities composed of cash received from customers. Cash received from customers is a positive receipt. Cash paid to suppliers and employees, that is the payment. So that is shown in bracket, it means this is payment. Then interest received on marketable securities. So we have some marketable securities on which we received interest. That is shown positive receipt of cash. Interest paid on loans, again negative sign because we are paying this interest. And income taxes paid is also a cash outflow, so it is shown in the bracket. So the net result is we have a positive cash flow or net cash provided by operating activities of $585. Which one? Interest is operating activity because it is an expense, but giving loan itself is a financing activity. Right. No, but his question is valid that if it is a loan, it is going to be in financing activity, but if it is interest on loan, it is going to be in operation. That little bit of confusion. Again, another confusing item can be dividend. If it is dividend received, it means you have invested in some other company and you are receiving dividend. It will be in operating activities. But if it is dividend paid, then it is financing activity. So these two items are a little bit confusing. Okay, what are the questions which are answered by the statement of cash flows? How much cash did the firm generate from operations? How did the firm finance fixed capital expenditure, means investing activities? How much new debt did the firm add? So financing activity will show that what is the new amount of debt. And was the cash from operations sufficient to finance fixed asset purchases? So these are some of the questions which are answered by this statement of cash. Okay, now some of the limitations of the financial statements. We have covered all the financial statements: balance sheet, income statement, statement of retained earnings, and the statement of cash flows. Some of the limitations, obviously GAAP standards are followed, which are generally accepted accounting principles. We have already discussed that all the fixed assets in the balance sheet are represented on cost principle. So that is one of the limitations. We are not reflecting our current assets at the current market price, rather we are going back to the historical cost. Then certain approximate values are there in the in our financial statement. One example is depreciation. Why depreciation is an estimated value? What is there in depreciation that makes it a estimated value?
Based on inflation, this may vary.
Yeah, that estimated useful life, who is putting that? We are the one who are defining it. So there is an estimate. So that estimate, as he mentioned, it can be like the useful life can be more, it can be less. So because of that, we cannot say that these are perfect, everything. Right. Again, allowance for doubtful debts. Another thing that we do is from our account receivables, we deduct certain portion as our doubtful debts. Like obviously, once you sell something on credit to so many different people, the chances are that the chances of 100% recovery are very remote. It rarely happens that you recover 100% of your debt. So you have to keep certain cushion for that. So in financial statements, in balance sheet, we keep a small cushion for that. That okay, if we have sold a certain amount of things on credit, maybe 5% of that would be bad. It would not be recovered. So now again, this is some estimated figure which might be right, which might be wrong. So that is the problem with the financial, with the balance sheet, that estimated amounts are there. Different, yes.
What this gap stands for?
Generally accepted accounting principles.
These are defined by standard organizations.
Standard organizations, right? There are like Financial Accounting Standard Board is there. Generally accepted accounting principles.
They are defined by
These are defined by different accounting bodies are there. One is FASB, Federal Accounting Standard Boards. That is the one which defined, and the companies are both US based, but they are globally accepted, right?
just like
Right. Again, another issue with the financial statement is different accounting techniques can be used, which will result in different figures. For example, inventory valuation that we already mentioned, first in, first out, last in, first out. That both are different techniques. If you use FIFO, which is first in, first out, the result, the value of inventory would be different. And if you use LIFO, which is last in, first out, the value of your inventory would be different. So use of different techniques will result in different values. So that is another limitation. If the companies can, for example, what will happen in case of FIFO, first in, first out, your ending inventory will always be at a higher price because inflation is there, so prices keep on increasing. So your ending inventory will be at a higher price, your cost of goods sold would be low. So if cost of goods sold is low, your net income would be higher, right? So if you want to show higher income as you want to publish your financial statements, you can use FIFO there. And if you want to avoid the tax, then you can use LIFO, because in case of LIFO, net income will be less. Net income would mean less income tax. So different accounting techniques can result in different figures. फर्स्ट इन फर्स्ट आउट का मतलब जो आपने सबसे पहले स्टॉक लिया है पहले वो बेचेंगे, तो जो सबसे पहले लिया होगा वो सस्ता होगा, क्योंकि इन्फ्लेशन है, हमेशा बाद वाली चीज़ महंगी मिलती है। पेट्रोल की एग्जांपल ले लें, जनवरी में अगर आपने लिया है तो वो पेट्रोल किसी और रेट पे होगा, फरवरी में किसी और पे होगा, मार्च में किसी और पे होगा, अप्रैल में किसी और पे होगा, और द ट्रेंड इज कि जो अप्रैल वाला वो सबसे एक्सपेंसिव होगा। ठीक है, तो फर्स्ट इन फर्स्ट आउट में जब आप अपनी कॉस्ट शो करेंगे, जो हमने बेचने की है, जो आपकी कॉस्ट आ रही है, तो उसमें ये सारी शुरू वाली फिगर्स आ रही हैं, कम वाली फिगर्स आ रही हैं, तो आपकी कॉस्ट कम आ रही है, जिसकी वजह से आपकी नेट इनकम ज़्यादा शो होगी, और नेट इनकम ज़्यादा शो होगी तो विच इज़ मोर अट्रैक्टिव टू द इन्वेस्टर्स, पब्लिक के लिए ज़्यादा अट्रैक्टिव है। जब आपने टैक्स बचाना है तो फिर आप ये काम नहीं करेंगे, फिर आप लाइफो की तरफ चले जाएंगे कि जी मोस्ट रिसेंट आप शो करेंगे जी ये हमारी सेल हुई है, तो इट विल रिजल्ट इन हायर कॉस्ट मीन लेस इनकम मीन लेस टैक्स। नहीं चेंज हो रहा है ना, नहीं लेकिन प्राइस हर पर मंथ चेंज हो रही है, बट स्टिल इट इज राइजिंग ना। मतलब लेट्स सपोज पेट्रोल जो है वो जनवरी में 60 था, फरवरी में 65 हो गया, अप्रैल में मार्च में 70 हो गया, अप्रैल में 75 हो गया। तो फर्स्ट इन फर्स्ट आउट आप अगर शुरू के महीनों की सेल शो कर रहे हैं, यानी आप ये कहते हैं कि जी हमारी जो कॉस्ट आई है वो आई है जो हमने शुरू में लिया था, तो ऑब्वियसली कॉस्ट कम आ रही है ना वहाँ पे, क्योंकि उनकी वैल्यू, उनकी प्राइस कम है, तो कम आएगी तो आपकी ऑब्वियसली कॉस्ट कम है तो इनकम ज़्यादा है। इनकम ज़्यादा अगर आपने शो करनी है तो दिस टेक्निक कैन बी यूज्ड। और दूसरी तरफ अगर आपने टैक्स बचाना है तो फिर आप ऑपोजिट चलेंगे, आप कहेंगे जी ये सबसे पहले तो हमने ये इशू किया है, तो कॉस्ट हमारी ज़्यादा आई है, हमारी इनकम कम है, इसलिए हमें टैक्स भी कम लगना चाहिए। तो नेट वैल्यू पे कोई फर्क नहीं पड़ेगा, दैट इज़ राइट। मतलब लॉन्ग रन पे जाके नहीं, वो उस वक्त का तो पर्पज़ आपका हल हो गया ना, मतलब फाइनेंशियल ईयर क्लोज हो रहा है ना, तो फाइनेंशियल ईयर क्लोज तक तो आपने लगा दिया लाइफो, अगले साल जाके वो बैलेंस हो जाएगा, बैलेंसिंग इफेक्ट उसका बैलेंसिंग इफेक्ट जरूर होगा, लेकिन उस साल में वो आपको फायदा दे जाएगा। तो डिफरेंट अकाउंटिंग टेक्निक्स कैन रिजल्ट इन, इसी तरह से डेप्रिसिएशन में भी स्ट्रेट लाइन मेथड में डेप्रिसिएशन कम आएगी, एक्सेलरेटेड डेप्रिसिएशन में आपकी डेप्रिसिएशन ज़्यादा आएगी। अगर आपने कॉस्ट बचानी है तो आप एक्सेलरेटेड लगा दें, एक्सपेंस ज़्यादा शो होगा, इनकम कम आएगी, टैक्स कम लगेगा। अगर आपने इनकम ज़्यादा शो करनी है स्ट्रेट लाइन मेथड लगा दें। Legally, it is allowed. There is nothing wrong in using these techniques.
And for the same statement, you can give one person and second one to another.
You can do that, right?
It will not be challenged.
No, it will not be challenged because it is allowed by the tax authorities as well.
तो ये जो slide है, और this is about the
Limitations of financial.
So gap standards are the limitation of financial.
ये सारे गैप स्टैंडर्ड्स हैं जो कि फॉलो किए जा रहे हैं, तो वही गैप स्टैंडर्ड्स ही उसकी लिमिटेशंस भी बन रहे हैं। मतलब गैप स्टैंडर्ड है ना कि आप कॉस्ट प्रिंसिपल पे जाएं, आप अपनी कॉस्ट शो करें, हिस्टोरिकल कॉस्ट शो करें, तो गैप को तो फॉलो कर रही हैं कंपनीज, लेकिन वो लिमिटेशन भी है कि आपकी करंट मार्केट तो रिफ्लेक्ट नहीं हो रही उसमें, करंट प्राइस तो रिफ्लेक्ट नहीं हो रही। इसी तरह से डेप्रिसिएशन जो है वो गैप स्टैंडर्ड है, फिक्स्ड एसेट्स में से कंपनी डेप्रिसिएशन अपनी शो कर रही है, फॉलो तो हो रहा है गैप स्टैंडर्ड, लेकिन डेप्रिसिएशन एक अप्रोक्सीमेट वैल्यू है जिसकी वजह से आपकी क्या कहते हैं एक्यूरेसी ऑफ योर फाइनेंशियल स्टेटमेंट्स कैन आल्सो बी चैलेंज्ड। ठीक है, तो गैप स्टैंडर्ड्स तो हैं, बट एट द सेम टाइम देयर लिमिटेशंस एज वेल। नहीं, स्टैंडर्ड तो फिक्स हैं, नहीं वो एवेलुएट भी हो रहे हैं, लेकिन इंटेंशनली उनको ऐसा रखा गया है, उनको इंटेंशनली ऐसा रखा गया है। वो तो एवरी ईयर दे आर रिवाइज्ड, जो आपके स्टैंडर्ड्स हैं वो रिवाइज हो रहे हैं, लेकिन इनको इंटेंशनली इसके अपने प्रॉज एंड कॉन्स हैं। जैसे मैंने हिस्टोरिकल वाली आपको एक एग्जांपल दे दी कि उसमें क्यों करंट मार्केट को अलाउ नहीं किया जा रहा, क्योंकि करंट मार्केट वैल्यू इफ इट इज अलाउड देन इट विल बी ऑल बेस्ड ऑन ओपिनियंस, योर फाइनेंशियल स्टेटमेंट विल ऑल बी ओपिनियन बेस्ड, अगेन इट विल बी challenge, something which you can challenge. So to avoid that situation, it is better to come up with something which is documented. ठीक है, तो each approach has its own pros and cons. Okay, now again another limitation is certain gains and losses bypassing income statement. There can be certain gains and losses which are not reflected in the financial statement. The other case that is mentioned here about WorldCom, if you go through this small paragraph, this covers this point. What WorldCom was doing.
इससे पहले एक छोटा सा पिछले वाले में पढ़ी, इसमें आपने वो रिसीवेबल में भी अमाउंट शो किया और
उसमें नहीं शो किया, ऑपरेटिंग में नहीं शो किया, उसको फाइनेंसिंग में शो किया। शो उसको ऑपरेटिंग में करना चाहिए था, उन्होंने ऑपरेटिंग में नहीं शो किया, उसको फाइनेंसिंग में शो किया, जिसकी वजह से उनकी नेट इनकम ज़्यादा शो हो रही है मोर अट्रैक्टिव बनाने के लिए।
कैसे शो हो रही है?
मतलब वो यूज़ हो रहा है ना, अब वो एक्चुअली आना चाहिए था इन यूज़ ऑफ कैश, ठीक है। तो यूज़ ऑफ कैश की वजह से आपके ऑपरेटिंग कैश कम आनी चाहिए थी, उन्होंने उसको वहाँ शो ही नहीं किया, यूज़ ऑफ कैश में शो ही नहीं किया, उसको उन्होंने फाइनेंसिंग में किया, हमने ये लोन दिया लोगों को, तो वो ऑपरेटिंग तो कवर हो गया आपका वहाँ से, यानी वो आप एक्स्ट्रा कैश 7.6 बिलियन उसमें शो हो रहा था, एक्चुअली इट वाज 3.5 बिलियन। तो वो लोगों के लिए तो अट्रैक्टिव था, बट इट वाज रॉन्ग।
इसमें लिखा हुआ कि वर्ल्ड ऑफ बैंक्स 30 मिलियन ऑफ बैंक्स लोन दे लोन ऑन बैंक स्टेटमेंट।
हाँ हाँ बिल्कुल, तो ये वो बैंक स्टेटमेंट को तो उन्होंने चेंज किया ना,
बैंक स्टेटमेंट
ये अपनी फाइनेंशियल स्टेटमेंट को नहीं, बैंक स्टेटमेंट नहीं, वो फाइनेंशियल स्टेटमेंट्स को बेस करता है ना, तो फाइनेंशियल स्टेटमेंट को उन्होंने मॉडिफाई किया, जो कि उन्होंने बिल लोन।
अपनी कंपनी की होगी ना फाइनेंशियल स्टेटमेंट।
हाँ हाँ,
लेकिन बैंक को देखिए लोन ऑन बैंक स्टेटमेंट।
बैंक स्टेटमेंट तो बड़े बिजनेसेस की वैसे ही ठीक होती है, वो तो बैंक स्टेटमेंट तो वो काफ़ी अर्से से उनके साथ डील कर रहे होंगे, अकाउंट भी उनका बड़ा होगा, अकाउंट भी उनका बड़ा होगा, लेकिन फाइनेंशियली क्या, वो मतलब वो लोन का पैसा तो उनको क्या पता है बैंक वालों को ये पैसा किसका है। कैश तो शो हो रहा है उनके अकाउंट में, बट फ्रॉम वेयर दिस कैश इज कमिंग। जी हाँ, ये पढ़ा आपने आज, इसका कोई आइडिया क्या उन्होंने रॉन्ग, व्हाट वाज रॉन्ग दे डिड? जो उनके रेवेन्यू, जो रेवेन्यू एक्सपेंडिचर्स थे, उन्होंने उसको कैपिटल एक्सपेंडिचर में डाल दिया। जो रेवेन्यू एक्सपेंडिचर्स हैं आपके, वो आते हैं आपके इनकम स्टेटमेंट के अंदर, ठीक है। तो इनकम स्टेटमेंट में अगर आप उनको डालेंगे तो आपकी इनकम जो है वो कम हो जाएगी। उन्होंने ये नहीं किया, उन्होंने उसको कैपिटल एक्सपेंडिचर वो होता है जो स्प्रेड हो जाता है ओवर द पीरियड ऑफ ईयर्स, ठीक है। उन्होंने कहा जी हमारा तो ये रेवेन्यू एक्सपेंडिचर इस साल का तो खर्चा ही नहीं है, तो हमारा लॉन्ग टर्म कैपिटल एक्सपेंडिचर है। तो बजाय इसको कि वो उसको अपनी ऑपरेटिंग इनकम में वो लेकर आते हैं, ऑपरेशन में नेट इनकम में उसको लेकर आते हैं, वो उसको बैलेंस शीट में ले गए हैं, ठीक है। यस, वो बड़ा, उसकी वजह से उन्होंने लोन ले लिया वहाँ से कि जनाब हम तो इतना इनकम अर्न कर रहे हैं, तो आप हमें, बिल्कुल बिल्कुल, तो दैट वाज द trick they played that ठीक है। कैपिटल एक्सपेंडिचर और रेवेन्यू एक्सपेंडिचर क्लियर। रेवेन्यू एक्सपेंडिचर आर दोज व्हिच आर चार्ज्ड इन योर इनकम स्टेटमेंट। तो इनकम स्टेटमेंट में आ रहा तो आपकी ऑब्वियसली नेट इनकम को वो हर्ट करते हैं, नेट इनकम उस यानी रेवेन्यूज में से माइनस हो जाते हैं। तो व्हाट दे डिड, इंस्टेड ऑफ चार्जिंग दोज एक्सपेंडिचर इन देयर इनकम स्टेटमेंट, दे चार्ज देम एज अ कैपिटल एक्सपेंडिचर, यानी वो दे टुक इट कंप्लीटली ऑफ फ्रॉम योर इनकम फ्रॉम देयर इनकम स्टेटमेंट। तो जिसकी वजह से उनकी इनकम स्टेटमेंट जो है वो लॉन्ग टर्म एक्सपेंसेस में उन्होंने डाल दिया, उसको कैपिटल एक्सपेंडिचर्स में ले गया। दैट वाज फ्रॉड। वो जो पहले वाला केस था वो फ्रॉड नहीं था, फ्रॉड था लेकिन वो इतना बड़ा फ्रॉड नहीं था, ये फ्रॉड था, क्योंकि ये कंपनी अल्टीमेटली बैंकक्रप्ट हो गई थी, फिर वर्ल्डकॉम वाज डिक्लेयर्ड बैंकक्रप्ट। ओके, लेट्स मूव ऑन। Okay, again, these are some of the limitations. There are hidden liabilities and assets, like if there is a litigation going on, so obviously that litigation cost is not shown in any statement, because once it is settled, then it will be settled. अभी तो चल रहा है, तो वो किसी भी स्टेटमेंट में लिटिगेशन का कॉस्ट तो नहीं आता। लीज एंड डेट एप्लीकेशंस कैन ऑल्सो बी sometime they can also be taken off from the balance sheet, and certain other expenses like off balance sheet, for example, if the services you provide to your retired people, right, if there are people who are retired from your company and you are offering them any type of compensation or maybe medical coverage or something, so those type of expenditures are also not reflected in the balance sheet or any income statement, but that is your obligation, that is off balance sheet liability. Same thing applies with the companies which are selling electronic equipment. आपने फ्रिज बेचा है और आपने कहा जी 3 साल की इस पे कंप्रेसर की वारंटी है, 1 साल की इस पे पार्ट्स की वारंटी है। नाउ दिस वारंटी इज नेवर शोन इन एनी ऑफ द फाइनेंशियल स्टेटमेंट्स। वो है तो आपकी लाइबिलिटी है, अगर वो फ्रिज खराब हो जाता है यू हैव टू पे फॉर दैट, बट यू आर नॉट शोइंग। ऑल दीज आर योर ऑफ बैलेंस शीट लाइबिलिटीज। If it is insurance, then it is shown in the final. Because insurance per month, if you are paid advance, like usually you pay advance, so it will be shown in the current assets. Prepaid insurance is shown in the balance sheet. Okay, now this topic will take a new turn, because now we are going to see how this data can be modified to help the financial managers in their decision making. So financial statements, they are designed more for use by the creditors and tax collectors rather than being used by the managers and stock analysts. So that is why we need to modify our data. For the purpose of further getting useful information out of our financial statements, we divide our assets into two categories. One are our operating assets. ठीक है, ये पहले हमने डिफाइन नहीं किए हैं. हमने जो बैलेंस शीट में डिफाइन द क्लासिफिकेशन वी डिड इन बैलेंस शीट वाज करंट एंड नॉन करंट. But for the purpose of analysis of these statements, we are making the classification on the basis of operating assets and non-operating assets. Operating assets, which are necessary to operate the business, without which we cannot do the business. Non-operating assets, which would include cash and short-term investments above the level required for normal operations, investment in subsidiaries, and land held for future use. So those assets which are surplus, they come under non-operating assets. Right? So the differentiation is clear. Operating assets which are essential, without which we cannot operate, without which we cannot do our business, and non-operating assets are surplus assets which we might require at a future date, but currently they are surplus, which are not in use. Okay, for the purpose of accounting record, we are interested in net income. In accounting, or accounting income is net income, which is your revenues minus expenses. That is your net income. But as far as the financial managers are concerned, they are more interested in net cash flows. What are the net cash flows of the business? Now, how we can calculate this net cash flow, or NCF, net cash flow? Net income, that is the one that we calculated after deducting from the revenues minus expenses, is our net income. Now we are deducting non-cash revenues. If there are certain revenues which are non-cash, non-cash means they are receivable. Okay. We use accrual-based accounting. In accrual-based accounting, what we do, if we have provided services to someone, we record it as a revenue, although we have not received the payment. So that is, for accounting purpose, that is a revenue, but that is not yet received. So if they, no, income, that is income, but cash is not there right now. Cash will come at a later stage, but the moment, it is a credit. The moment we are preparing this financial statement, at that time it is not cash.
It is some known or
Credit sales, you can say. This. And then non-cash charges. What are the non-cash charges? We have just discussed two major non-cash expenditures. One is depreciation and other is amortization. So basically, net income, if there is any non-cash revenue, if there is, there might not be any non-cash, they all are cash, so we have to deduct nothing. And if there is any, usually depreciation is always there, so we have to add back depreciation to get net cash flow. So this is how we calculate net cash flow. Typically, depreciation and amortization are by far the largest non-cash items, and in many cases the other non-cash items roughly net out to zero. So as I mentioned, usually we don't have any non-cash revenues, but depreciation and sometimes generally we don't have amortization as well, but depreciation almost every business has, because fixed assets will be there and depreciation will be there. So in simple terms, you have to add back depreciation in your net income to get net cash flows. Why we are doing it? Because depreciation is a non-cash charge, so it must be added back to net income to obtain the net cash flow. Net cash flow, we are looking at the cash flow. So whatever we have calculated net income, there was an expenditure which was non-cash. Depreciation, we have not paid cash anyone. That is why we are adding it back. नहीं depreciation, हाँ वो जब purchase किया था asset उस वक्त पे. अब जो depreciation expense है, that is non-cash. So that is why it is. amortization जैसे मैंने बताया कि even if you purchase a patent or if you purchase a trademark, what we do, what is the normal practice, instead of putting it in one go in our income, because that's once you have to spend some money on it, and once you are spending it money, you are treating it as a fixed asset. So just like fixed asset, you are doing.
You told us it is the depreciation on the side.
Right. So patent and
What is the example?
patents and trademarks,
Patent and trademark.
trademark, goodwill as well also. These can be example of amortization. Like their cost is spread over the longer period of time. That is why amortization will be there. Okay, operating current assets versus operating current liabilities. Operating assets are those assets which are essential for the business. They are further divided into operating current assets such as inventory and long-term operating assets such as plant and equipment. So operating assets, operating current assets and operating current assets would be our inventory or cash, even account receivables will be in operating current assets. Long-term operating assets are plant and equipment, or you can say they are the fixed assets. So both of them combined, like if you want to calculate total operating assets, they will be, total operating assets is sum of total operating assets is sum of current operating assets, plus operating fixed assets. So it means current operating assets are those current assets which are essential for the running of the business, and current fixed assets again are operating fixed assets are essential. Like if there are surplus fixed assets which are intended for future use, it will not be included here. So must all of the capital used to acquire assets be obtained from investors? No, the answer is no. Why? Because some funds will come from suppliers and be reported as accounts payable, while other funds will come as accrued wages and accrued taxes. So these are also sources of funds. Like if we have purchased from someone on credit, that is also a current liability. And if there are some outstanding expenses, although outstanding expenses mean we have already used those facilities but we have not paid for them, so they will also be treated as current liability.
So you need your operating fixed assets, and these are the plants and equipment.
Plant and equipment.
Now when your long-term operating assets can your operating fixed assets can.
Operating fixed, same thing. Operating fixed assets or operating long-term assets is the same thing. Net operating working capital. Net operating working capital is calculated, the formula is operating current assets minus operating current liabilities. So operating current assets minus operating current liabilities.
That is going to be the
Net operating working capital. Net operating working capital is the working capital acquired with investor supplied funds. So I hope in the next slide it is made clear. Here you can see the definition is little bit more elaborated. What is net current assets? Operating current assets. Operating current assets include cash, account receivable and inventories. And operating current liabilities include accounts payable and accruals. So if you can say non-interest bearing liabilities, because both of them, accounts payable as well as accrued expenses, are non-interest bearing. There is no interest. These are other than something that we have borrowed from creditors. Total net operating capital, net operating working capital plus operating long-term assets. NOWC plus operating long-term asset is total net operating capital. So it can also be calculated by adding up the funds provided by investors such as notes payable, long-term bonds, preferred stock and common stock. It is also known as operating capital, net operating assets and capital. काफ़ी ज़्यादा terms नई आज आ रही हैं. Hopefully you digest all of them. Operating, total operating asset, net operating working capital, total net operating capital. Accrued expenses, those expenses which are incurred but not paid, outstanding expenses. Wages, income tax payable, accruals में आ जाएगा ना? हाँ, नहीं टैक्स, इनकम की बात नहीं कर रहे हैं हम, वो तो इनकम टैक्स क्या नहीं, मैं इंटरेस्ट कहा था, मैं नॉन इंटरेस्ट बेरिंग, हाँ नॉन इंटरेस्ट बेरिंग लाइबिलिटीज, वो लाइबिलिटीज इसमें इंटरेस्ट नहीं देना पड़ता, तो अकाउंट, हाँ अकाउंट पेबल पे भी कोई लाइबिलिटी नहीं है, एक्रूवल्स पे भी कोई लाइबिलिटी नहीं है। अगर आप किसी से लोन लेंगे तो उस पर लाइबिलिटी देंगे। गर्म हो गया? नहीं अभी तो ओके। अनदर थिंग इज नो पैट, एक और नई डेफिनेशन है, नेट ऑपरेटिंग प्रॉफिट आफ्टर टैक्सेस। नेट ऑपरेटिंग प्रॉफिट आफ्टर टैक्सेस। Net income does not always reflect the true performance of a company's operations or the effectiveness of its operating managers. A better measurement for comparing managers' performance is NOPAT, which is net operating profit after taxes, which is the amount of profit a company would generate if it had no debt and held no financial assets. ठीक है जी। अब NOPAT क्यों? क्योंकि हम ये अज्यूम कर रहे हैं कि अगर कंपनी के पास कोई डेट ना हो तो उसकी इनकम क्या होगी, दैट इज NOPAT, नेट ऑपरेटिंग प्रॉफिट आफ्टर टैक्सेस। टैक्स भी माइनस कर रहे हैं लेकिन इंटरेस्ट माइनस नहीं कर रहे हैं। इसलिए जो हमने इसकी कैलकुलेशन की है वो किस तरह की है, अर्निंग बिफोर इंटरेस्ट एंड टैक्सेस, 1 माइनस टैक्स रेट। अगर टैक्स रेट 40% है तो 1 माइनस 0.40 मीन्स 0.6, तो इसका मतलब है कि ये वो प्रॉफिट आ जाएगा जिसमें से टैक्स तो माइनस हो गया लेकिन इंटरेस्ट माइनस नहीं हुआ, दैट इज नेट ऑपरेटिंग प्रॉफिट आफ्टर टैक्सेस। हाँ ज़्यादा होगा। इसके निकालने से सिर्फ एक चीज़ निकाल रहे हैं हम, इंटरेस्ट निकाल रहे हैं, बाकी तो टैक्स ले रहे हैं। हम ये कह रहे हैं कि दो कंपनीज हैं, अगर हम दो कंपनीज की परफॉर्मेंस को कंपेयर करना चाहते हैं और एक कंपनी टैक्स इंटरेस्ट यानी लोन बेस्ड है, एक लोन बेस्ड नहीं है, तो लोन के फैक्टर को हटा के हम देखना चाहते हैं कि किस कंपनी ने बेटर परफॉर्म किया। ओके, फ्री कैश फ्लोज अनदर मेजर फॉर दो, ये जो फर्म जो मैनेजर्स हैं उनकी परफॉर्मेंस को जज करने के लिए वी फाइंड आउट कि व्हाट इज द फ्री कैश फ्लोज। फ्री कैश फ्लोज आर दोज, actually it is the cash available for distribution to investors after the company has made all the investment in fixed assets and working capital necessary to sustain ongoing operations। यानी अगर आप ये कह लें कि हमें जितना कैश जरूरत था, किसके लिए जरूरत था कैश हमें, फॉर इन्वेस्टमेंट इन फिक्स्ड एसेट्स एंड फॉर वर्किंग कैपिटल, that cash is used. Now whatever is left over, that is the pure, that is free cash flow. It can be used for any purpose. So the formula for calculating free cash flows is net operating profit after taxes minus net investment in operating capital. ये भी न्यूमेरिकल्स आएंगे तो आपको सारे क्लियर हो जाएंगे। Where this free cash flow can be used, it can be used to pay interest to debt holders, it can be used to repay debt holders, it can be used to pay dividend, repurchase of stock from shareholders, and to buy marketable securities or other non-operating assets। ठीक है, ये free cash flow it can be used for any purpose you want। दो स्लाइडें रह गई जी, बस बर्दाश्त करें। एक है नेट मार्केट वैल्यू एडेड। मार्केट वैल्यू एडेड बेसिकली शोज व्हाट इज द एडिशन इन द मार्केट वैल्यू ऑफ शेयर्स मेड बाय द मैनेजर्स, यानी जो शेयर्स हैं उनका मार्केट के अंदर कितना, एक बुक वैल्यू है, बुक वैल्यू क्या थी, नहीं बुक वैल्यू पर शेयर, हाँ बुक वैल्यू ये थी कि आपके बुक्स के हिसाब से शेयर की वैल्यू क्या आती है, और एक मार्केट वैल्यू है कि मार्केट में उसकी क्या, इन दोनों का जो डिफरेंस है दैट इज मार्केट वैल्यू एडेड। वो आप फॉर्मूले में भी देख लें कि मार्केट वैल्यू ऑफ स्टॉक माइनस इक्विटी कैपिटल सप्लाइड बाय शेयर होल्डर, इन दोनों का डिफरेंस है दैट इज मार्केट वैल्यू एडेड। द हायर द मार्केट वैल्यू एडेड द बेटर द जॉब मैनेजमेंट इज डूइंग फॉर द फर्म शेयर होल्डर। जितना मार्केट वैल्यू एडेड हायर है उतना बेहतर परफॉर्मेंस है कंपनी की या कंपनी के मैनेजर्स की। और इसी से रेलेवेंट जी मार्केट वैल्यू नहीं, टोटल आएगा, ये टोटल अमाउंट, टोटल वैल्यू आएगी, पर शेयर नहीं आएगी। एंड इकोनॉमिक वैल्यू एडेड, Economic value added represents the residual income that remains after the cost of all capital, including equity capital, has been deducted, whereas accounting profit is determined without imposing a charge for equity capital. So economic value added can be calculated as no PAT, net operating profit after taxes, minus after tax dollar cost of capital used to support operations. So it is further expanded as EBIT, earning before interest and taxes, 1 minus T is your no PAT, minus total net operating capital multiplied by working cost of capital, weighted average cost of capital, WAC, WAC is weighted average cost of capital, यानी जो आपकी कैपिटल के ऊपर कॉस्ट आ रही है, अगर आप वो पैसा कहीं से लें तो कितना इंटरेस्ट देंगे, दैट इज WAC, weighted average cost of capital. So मार्केट रेट में सारा आ जाएगा ना, बेसिकली मार्केट रेट ऑफ इंटरेस्ट, सारे फैक्टर्स उसमें इंक्लूडेड होंगे. So this is more मार्केट, WAC इज मार्केट रेट ना, तो आप खुद तो नहीं डिटरमाइन करेंगे, जो मार्केट में उस वक्त रेट है दैट इज द कॉस्ट ऑफ कैपिटल. कितने में आपको, अगर आपने वो पैसा बाहर से लिया होता तो कितने में आपको उस पर कितनी कॉस्ट पड़ती. नहीं, हम ये कह रहे हैं टोटल नेट ऑपरेटिंग कैपिटल किसको कह रहे हैं, हमें इतना पैसा चाहिए था, अगर इतना पैसा हम किसी आउटसोर्स से लेते, आउटसाइड से लेते तो कितना इंटरेस्ट पड़ता, ये वो है. हाँ, कहते हैं कि हमें इतना प्रॉफिट हुआ, ठीक है, अब इसका डिफरेंस हम देख रहे हैं कि अगर हमें ये प्रॉफिट जनरेट करने में जो हमें कॉस्ट आती है, लेट्स सपोज यही पैसा हम कहीं और इन्वेस्ट करते तो हमें कितना उस पर अर्न होता, इन दोनों में जो डिफरेंस है वो हमारा इकोनॉमिक वैल्यू एडेड है, कि बेसिकली हमने मार्केट के लिहाज से कितना अर्न किया है, ये चीज हम देखना चाह रहे हैं ना. मतलब लेट्स सपोज मेरे पास 10 लाख रुपए है और 10 लाख रुपए से हमने एक बिजनेस किया जिससे हमने एक ये लेकर आए, हम प्रॉफिट लेकर आए हैं. ठीक है, मल्टीप्लाई किया, वो हमारी कॉस्ट आ गई. अब उसको हमने प्रॉफिट में से माइनस किया तो जो डिफरेंस आ रहा है वो ईवी है, ईवी, राइट. अब इससे हमें पता चलेगा कि बेसिकली हमने मार्केट से कितना अच्छा परफॉर्म किया. मार्केट में तो हमें इतना मिल रहा था, हमने इतना प्रोड्यूस किया, इसका मतलब है कि हम उससे ज़्यादा अच्छा परफॉर्म कर रहे हैं. सो विद दिस टुडेज लेक्चर इज ओवर. नाउ